Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states and Puerto Rico, founder of CGO, contractual guarantees only. You own an annuity for what it will do, not what it might do, not hopes and dreams, because you're going to own the contractual realities. Question of the day is, what do annuity companies, life insurance companies that issue annuities, what do they invest in, Stan the Annuity Man? Well, there's a broad answer to that, and then we'll get a little bit more detailed after this. So, life insurance companies, I always tell people they have the big buildings for a reason because they know when we're going to die, as opposed to property and casualty companies that do not know when the hurricane is going to hit or the fire is going to happen, etc. Living on the coast of Florida some of the time, I can tell you right now, property and casualty companies come and go. Life insurance companies do not, because they know when we're going to die and they price things accordingly. Life insurance is a great investment. It's the best return on investment you'll never see because you're going to be dead. But what life insurance companies issue annuities. So in essence, they're taking your money and they know when you're going to die. So they have to just invest it in very safe bond type investments that's regulated by the National Association of Insurance Commissioners. They just can't take your money and go crazy with it. I always say life insurance companies aren't smarter than banks from an investing standpoint. They're just more handcuffed regulatory wise. Now, the annuity companies have to report what they're investing in. They have to be very transparent, not only to the shareholders, but to the National Association of Insurance Commissioners. Each state insurance commissioner oversees the fixed annuity products. They also have some oversight a little bit on the other products, but the other products I'm talking about that are more SEC FINRA based are variable annuities and registered index linked annuities. And those carriers have to be very transparent, as you can only imagine, because annuities are confidence products. You're transferring the risk to primarily solve for four things. The acronym I use is PIL. P stands for principal protection. I stands for income for life. L stands for legacy. The other L stands for long-term care. That's it. Okay? Now, the annuity companies are on the hook to be honest with what they are reporting to the carrier, to the insurance commissioner and the oversight people that look at that. We've had a couple instances, one recently about 5 years ago, check the time of this taping, where the investments that were being reported that they were doing, they weren't happening. Okay, so the insurance, the National Association of Insurance Commissioners and the State Guarantee Fund overtook that company because of that, and everybody got their money back. But this is serious. Okay, one of the reasons that I chose to come from the security side to the life insurance business side with annuities is I believe that this is the best run category from an oversight standpoint, from a safety standpoint, and where you're going to put your money. And with 15,000 people hitting age 65 every single day, it's very important that you know that your money is safe. Now, with lifetime income products, it's A+ or better. We go A+ or better and then choose the highest number after we quote all carriers for you. And then multi-year guarantee annuities, which is CD annuities, I personally look underneath the hood and make that recommendation because we're dating that company, not marrying them like we are with lifetime income products. So just think of very investment grade bond type portfolios that life insurance company and annuity companies invest in. One of the things that's come up here recently is you're getting a lot of private equity companies that are involved in the annuity space. And there's been some articles about private credit being part of the portfolio and some alternative investments. And we are seeing some of that with some of the bigger hedge funds and private equity companies that are getting into the annuity space. So they might have 50 companies or 100 companies, and one or two of them are annuity companies, and it kind of gets grouped in. But we are watching that and have been since 2021, that private credit story. It's an alternative investment. So we've seen some of the hedge fund groups that are coming into the annuity space. And you got to say, well, why are they doing that? Because it's a demographic tidal wave of people turning 65 looking for guarantees. They're trying to get in front of that. That can be both good and bad. Fortunately, in the annuity industry, it's so highly regulated that it's a good thing. Private equity companies and what I call masters of the universe, I think were very anxious to get in this space. And then when they got here, they figured out they're not going to be able to do the things that they want to do with that money and go, be as aggressive as they might like. You just cannot do that legally. And that's the reason there's a lot of stability in the annuity industry, in the life insurance industry. They are investing in safe things. The reason is they don't need to make a lot of money on your money because, let's just say they have $1 billion in treasuries or corporates or mortgage-backed securities or whatever that's investment grade, and they know when you're going to die. They just have to wait you out, for lack of a better phrase. I mean, lifetime income products, they're looking at when you're going to die and they're pricing it accordingly, and you're sharing the risk and pooling that risk, i.e. mortality credits, with people of your same age. Which leads to one more thing. I think this is a good topic because what do they invest in? It's very important that you're choosing good companies because life expectancy tables will change against you in the near future because of artificial intelligence shortening that time frame for medical breakthroughs, which means that the projections of your life expectancy will be longer, which means there's going to be more payments, which means those payments will be lower. I think right now we're at kind of old legacy tables for life expectancy, and they're a bargain. They're a bargain because it's not factoring in all of these medical breakthroughs. I'm reading good stuff about the GLP-1s and pancreatic cancer research and breakthroughs that have just really happened because of AI. Not the GLP-1s, but the cancer stuff is AI driven, and I think you're going to see more and more and more of that, which is a good thing. But from a carrier standpoint, a safety standpoint, and I do think because of that, I have put my foot in the sand and my banner in the sand, and you're doing lifetime income, we're A+ or better. And there are no exceptions to that. Period, end of story. My apologies to the carriers that aren't A+ yet. And I hope I'm wrong about that, but I want to make sure that my clients' money from lifetime income and what's called in the business tail risk, the ability to pay for as long as you're breathing, A+ or better is always got to be there. But I guess one of the things I want to talk about at the end of this is the NAIC, the National Association of Insurance Commissioners. I'm also going to throw in the SEC and NASD. They do a good job overseeing these companies and not letting them do something stupid with your money because they would if they were allowed. They're just handcuffed not to be stupid. And that's a good thing about the life insurance industry, especially with so many people, turning age 65, 15,000 a day looking for guarantees. All right, so I think, I'm very confident that the vast majority of my money is in the annuity space, mostly in MIGAs. I trust those carriers. I trust the people overseeing them. I trust the whole thing because you're transferring the risk. With annuities, you're transferring the risk to software principal protection, income for life, legacy, or long-term care. For me, I'm transferring the risk to software principal protection. And that's the legacy play for the family. The growth stock is me and my company, the Annuity Man, which you can't buy. But it's the best growth stock on the planet. The point is, I'm transferring the risk to those carriers for those interest rates that grow and compound tax deferred in a non-IRA account. So I have faith in these companies, and I have faith in the bigger companies within the industry to oversee the smaller ones and work in conjunction with the regulatory bodies to make sure that the golden goose of annuity confidence doesn't go away. And that's very, very important. Do me a favor, go to my site, theannuityman.com. You can download my annuity owner's manuals for free. You can schedule a call with me at your leisure. I will call right on the dot, and I will listen to you. You can email me, stan@theannuityman.com. Also, above my head, spinning clock, I did a cool video on why people still hate annuities. This video is kind of the reason you shouldn't, because money's safe. There's a lot of oversight and a lot of regulation behind the scenes to keep your money safe and to guarantee those lifetime income payments. But that video kind of covers why people still hate annuities. and how the industry could truly solve it overnight if they wanted to. The first step is putting me in charge of everything. No, they don't have to do that, but if they just followed my instructions, people would love annuities like they love the other annuity they own called Social Security. It's amazing to me that we can have a group, that we can have the country love Social Security, the best inflation annuity on the planet, and somehow the annuity category is still hated. One of the biggest marketing disasters of all time that I personally am working on to solve, putting out a video every single day until I drop dead on camera, which is kind of the goal, Dr. V. That's what we're looking for. So if I grab my heart one day and it looks like I'm having a stroke, roll the camera. It's gold. It's video gold. All right? My name is Stan, the Annuity Man. Thanks for listening. See you next time.